Welcome back to Proactive, and I'm delighted to be joined now by Dominic White, who is a director of Zamaz PLC, and a very warm welcome to you, Dominic. How are you doing?
Doing very well. Thanks for having me back on, Tom.
Good to have you on. Now, we're going to be chatting a little bit today about Dispensa. It's one of your subsidiaries, and it was the main subject of a trading update that came out this week. But before we start talking about that, perhaps you'd just like to get us up to speed with the Zamaz story.
Yeah, thanks for the opportunity to do that. So Zamaz is a retail brand owner and brand aggregator with a multi-channel distribution strategy, particularly with a focus and a strong expertise in e-commerce. Its focuses on two areas. One is luxury food products, which is the Dispensa subsidiary, and the other is sustainable brands and eco-friendly brands. And EcoMoist was one of the leading products on Amazon in that area. Which is one of the leading products in the sustainable space for Zamaz, is an eco product example. Company was founded in 2019. Some of the brands go back 5 or 6 years before that. And we brought the company, as I'm sure everyone knows, to market the autumn of last year. We did that because we saw an opportunity and some demand from investors who are interested in this strategy. So we've given them the opportunity to become part of that and follow us through investment. And because we're a buy and build strategy, being a public company with public securities is a useful tool to go out and buy other businesses with. And we saw demand from those other businesses who wanted to sell themselves to us and their brands to us, from then to swap shares and be owners in together with us in Zamaz. So that's a little bit of background on where we've come from and where we are right now.
That's great. Thank you, Dominic. So let's look in a bit more detail at Dispensa now. Just how significant a part of the portfolio is that?
Dispensa has become a very important part of the portfolio. It is a brand in its own right and an e-commerce platform in its own right. And through acquisition, it's bought a number of brand companies, 3 to be exact, which were the subject of the announcement. So it has more than 10 brands in the luxury food space, which for us is a very important part of the retail brand world out there now, and is actually seeing a lot of demand from a whole bunch of investors, from private equity through to other investment funds who are very interested in luxury food. So for Zamaz, it's important, it's growing, it's probably within the portfolio, it's probably around 3/4 of total revenue right now. So it's gone from being very small to being important for the business. The other sustainable products part of the business is going to be growing again through acquisition in the next 12 months, or that's our objective. However, Dispensa will remain an important part of the growing portfolio and operations of Zamaz.
All understood. Now, you did mention your 3-year buy and build strategy and growth plan earlier on, Dominic. So what sectors and markets are you going to be going after with that, do you think?
Well, for sure, the sectors continue in luxury foods, to continue to grow and push on with Dispensa, and to go out and buy more brands and brand companies in the sustainable products area. So we have a more of a balanced portfolio between food and other products. Markets, well, the company's international. It's an e-commerce, mainly e-commerce distribution, but there are also offline channels. So it's already distributing across Europe. A new market for sure is America, and I would believe in the next 6 months we'll be selling products into America. But it is a buy and build strategy, so we are looking at acquisitions of brand companies and retail technology, so that we can get our products through technology, through e-commerce and through offline in front of as many customers internationally as possible.
And you have already made 3 acquisitions since that main market listing back in September. So what is your approach when you're trying to identify somebody that you might like to take over?
Well, we're very interested. Clearly, it starts with the sector. So we've said which are the sectors they're important to us. The quality of the underlying product is very important, and the fact that it doesn't have to be enormous yet, but the fact that it's got a good track record to date, and that it's got good presence within its subsector, and that we believe there is strong demand for that product going forward. So we have a great pipeline. We have a bigger pipeline than we can execute right now, which gives us the opportunity to pick and choose. That's very important. And fortunately, and it's one of the other advantages of being a public company, brands, given the visibility the public company has, brands come to us and come to us to offer and discuss whether there's an opportunity for them to become part of the larger growing PLC. So sourcing brands I definitely wouldn't say it's easy, but we have the opportunity that they come to us because they see us. And we source them through lawyers from the sector, accountants from the sector, those that know we're in this business to do this, and we have this buy and build strategy, that they bring us brands and other technology opportunities that are relevant to ZAMZ.
It really plays into a theme that we've been hearing a lot about recently here on Proactive, Dominic, which is that if you are in a position of strength in the market, now is a fantastic time to go fishing, isn't it? Because there are bargains to be had.
Yeah, that's absolutely right. It's not just in retail brands and e-commerce that that's true. Clearly, it's true in other areas like fintech and other sectors where valuations have changed significantly over the last 6 to 12 months. If we were looking at buying brands, smaller brands, in 2020, 2021, and part of 2022, they'd have been 5, 6, 7, 8 times multipliers. They might well be 3s, 2s, and 3 times valuation multipliers. Obviously, that's a very general statement, but it's certainly the case that valuations have changed. Companies are finding it much more difficult to get hold of capital to grow themselves. So if you're fortunate enough to be able to use your paper, and you have listed paper, which is what we have, to acquire businesses from time to time, together with cash that we can bring into the company from investors that follow us, then it puts you in a great position. That's absolutely right.
And just one final question from me, Dominic. What is it that you think we can expect from ZAMZ over the coming months, do you think?
Well, for sure, continued growth. We have this pipeline we've put together. We are working on the best capital structures to be able to implement the acquisitions within that pipeline. So for sure, there'll be more growth coming through, more revenue growth through acquisition, but also more organic growth as we take smaller brands that we buy, we push them through the larger distribution channel we've set up offline and online, and particularly in e-commerce. So with the sales improving all the time, and we expect margins to improve as well as we go forwards, and the smaller brands become part of the bigger business and benefit from the centralization of services and the reduced costs within the standalone individual brands. So definitely growth, definitely acquisition, and we're excited to be in the market right now doing exactly that.
Well, Dominic, let me wish you the very best of luck with it all, and thank you very much for your time today. It's been a pleasure.
Thanks, Tom.